Cause it's Taco Tuesday. Where is it? Taco time. Where is it? Taco. Where is it? Taco. Where is it? Taco. Where is it? It's Taco. Where is it? Taco. It's Taco Tuesday.
Good morning, everybody, and welcome to Taco Tuesday with a seasoning of some CPI on top of it. We got CPI coming out at 8:30, and like every CPI, since we started dropping and inflation became a word that everybody knew about, everybody's out there with their guess and everybody's out there with their projection as to what happens when that guess comes out, what the number comes out to be. Numbers are numbers, data is data, charts are charts. What's going to happen is already programmed in. There's absolutely nothing we can do about it other than to interpret the data and assume the risk of a pre-report position and see what happens from there. Yesterday, we got our second green close. Like I was posting there in the alert room yesterday, right around 11 o'clock in the morning. Oh shit, 4132 should print, and the FEB is at 4136 because this is what we had expected was going to happen on Friday, that we were going to get that plus 1% day, and it failed. But then I started posting out warnings prior to lunch, which I'll show you on the charts. I mean, it's pretty much too late. But once this year, we printed plus 1% and didn't close above the plus 1% level once. It's there, and yeah, it just absolutely ran over everything. We broke above 1%, 41.31.36. We closed at 41.37.29. Did it again. Now, the tracking that I had from prior was we declined, broke greater than minus 1% 2 days in a row. We got the green day plus 1% the next day. Didn't get that on Friday. Got it here today, and again, go over the charts with you in a minute. Had it happen back here in January during OPEX week, after they announced Jerome Powell got COVID. Bang, bang, happened there. Had it back here again at the end of the year, December 30th, and on January 1st, where the full moon kicked in. Boom, boom. And right there, we had the green day after that. So it wasn't something that is projected because there has been misses and they've come through. But more importantly, what we're looking at right now, it is Taco Tuesday, and we have just had 2 consecutive green closes in a row. Go back as far as you want to go back. It's just something that the data's there showing as far as a streak. We had 3 green closes in a row. Last day of January, first 2 days of February. That was the FOMC day as well. We went up right to that 41.95 on that third one, and you saw the decline that we had since then. We had 2 in a row in January, 2 in a row in the middle of January, and this was our big streak right here. In second week of January, we had 4 in a row. And you can come back, we had 3 back in November, 3 the week after the big October 22 low. The next week after that, we had 4 in a row in September when we went up to that 41.20 the day prior to CPI when we had that big collapse. We had 3 in a row in August, twice in July, 4 in a row the week of July 4th, 3 in a row twice in May when we hit that 43.08 double top, and right after we had closed below the bear market line. So again, it's data is all that it is. It's data, but the data is pretty supportive, and especially when your charts are backing it up, and then you're also seeing other data to support it. It helps to go out there and decide that you're going to take a position prior to the report, as I did. You saw I sent out the alert there on the SPY puts. that I took on. And going in here to your email from yesterday, which I'll include again today's email, you have the prior FOMC meetings going back to September, where September it was 41.19 high of the day before CPI, and then this is your CPI report where we missed and we had the massive decline. October, you had your big run. November, you had your major gap up, and then flat sideways to the upside, very much like yesterday. December, not that much, had a big gap up, was where we printed 4,100 over here on the SPX, and then we declined and filled the gap during the course of the day and continued through a minus 8% drop into the lows of December, which I'll show you again. And then here was your last CPI report in January. We pretty much opened flat. We declined fractionally at the very beginning of the day and then traded flat and then moved a little bit upward and traded basically flat for the rest of the day. So it's not something out there that you start screaming, I know the code, I know the code. What you are trying to do is decipher the code. And in deciphering the code, you kind of got to look around and see what's out there. Well, here's the S&P futures, okay? Yesterday's volume is 506,000 puts. Actually, this is actually still tracking right now. I thought I'm looking at yesterday's data. Here is 500,000 puts versus 190,000 calls. And I may be right. Oh, yep, this does go back all the way through last night. Here's yesterday during the open. So, yeah, I'm looking at data that's going all the way back to yesterday morning. And again, you are sitting here with 500,000 puts versus 190,000 calls on the big boys. But again, talking about big boys, we'll bring this up and raise ourselves up here into the Fridays. These are the options that expire on Friday on the ES. And that Carl Icahn short position over here at 40.50 is still there. The open interest is still sitting there at 22,000. So he's still in that trade, which is, again, one of those things that you look at for your projection. So, again, here's your CPI right here on our very extensive detailed chart. Right here in December, you got your spike back up to 4,100 and then an 8% decline into that December low. And again, tracking yesterday was an absolutely nothing, straight up algorithm. Yep, no dip. We're just going to go ahead and troll ourselves and go to that 41.36. And we're going to come to that resistance line that's come here since these recent highs that we placed. Okay, then we're going to go dip. And no, we're not going to take that out. And you guys remember me talking about that at 3 o'clock. You need this break below this 41.20. And that was it. The algorithm just went in there and said, it is going to be what it is. We're going to that 41.36, which reason why 41.36 is so strong, that's your 161.8 retracement of the COVID drop. And the algorithm knows this, and the algorithm would be calling this a major top, same way as we had the COVID top when we got into that short because of where it was. That was your 161.8 of your 2018 drop. So anyway, here we are. That's what we were looking at as we go into it. And again, bringing it back to all of those full moons, bringing it back to these patterns that we're looking at from a wider point of view rather than the very closed in short term bull flag, which is all over Twitter right now. Again, got no control over this report, which comes out strictly looking at data alone, and again, seeing how these patterns work out, where our full moons are. And over here in December, very clear. Had your full moon right there, hit that 4,100 the day after, 2 days after that full moon, and then body slammed you down minus 8%. Got a 3% drop so far over here on the SPX. So, again, it's trying to be as bullish as possible without this dip having actually oversold ourselves to a point to get into another bullish position as we had been all through October and November, again during Christmas, heading into the new year. Still looking to get up here to that 43.50 4370 area, which would take us up in SPY, back up above the August highs. Just not seeing it relevant to a short-term point of view, that we are still looking to get somewhere into a little bit of a dip, and after that dip be able to progress ourselves for a much stronger strength-wise move to the upside. But again, bringing it back over here and zooming out from where we're at, uh, again, just a very, very closed-in time frame point of view. We got a 3% drop. Yesterday was nothing but algorithm all the way to that 41.36. And it's still looking as if it is prime that we are due for a little bit of a stronger move to the downside and possibly reconnect over here with that falling trend line from the 2022 highs right down there below 4,000, which is why, again, going back onto all of the data and all of the the trades that are going through, I've never seen as large of bearish put buying as I saw yesterday for weeks. I hadn't seen that for weeks. Here we are back at that 34,000. This is your top warning sign over here on the Dow. Looking over here on the NQ and the ES on the futures, and yesterday all four indexes came up on the futures, came up, touched those upper Keltner channels. You're already going in here in overbought on your 1 hour time frames on all the futures. So it's one of these situations where the report is going to come out. The report's going to tell you who was right, who was wrong, and everybody that was wrong, people are going to point the finger at them and say, "You're an idiot. You're stupid." Well, at least you got some data to back up why you made a stupid decision. Because if a guy can't hit a curveball and you throw him a curveball and he happens to hit a home run, as a lot of National League pitchers do happen to do once or twice during their career, but the guy did it. So anyway, that's what we're looking at. We're heading into the 8:30 report. The 8:30 report will give us an actual clue as to what we should be looking at for the rest of the day. And I hope you guys enjoy your breakfast. And I really hope you get to devour Taco Tuesday the way that this should work out. Have a fantastic morning.